Is it time to buy Twilio, TWLO stock? Stock's been on an absolutely wild ride. Pre-COVID was trading high single digits to low teens sales multiple. Then it went to just crazy town multiple. I previously called out, yeah, I think this is a little too rich. It traded from 30 to 40 times sales. Now valuation is contracted 90% to around under 4 times sales. Is this finally cheap enough? And we'll talk about the valuation towards the end of this video. First, a quick recap. What does Twilio even do? They provide communication-based application programming interfaces, or APIs, which allow customers to directly plug in their tools to enable different types of communication with customers, whether or not it's sending text messages or communicating via WhatsApp or sending emails, doing video chats, doing voice calls, all of it powered by their infrastructure. And this is a strong value proposition. When you think about, hey, one customer might want to reach out to their customers via many different ways, whether or not it's messaging, voice, video, or emails, and having effectively one end partner that you're working with to enable you to do this. Because keep in mind, this function of customer support isn't necessarily what you want to focus on. You want to be focusing on, how do I make my product special? And this is sort of might become, table stakes. This is just how you treat your customers. So this is a strong value proposition. Oh, okay, I need to make sure my customer support can reach our customers. Let's use Twilio because I know they've got it covered. And so it's not surprising to see that many of Twilio's customers are some of these top-notch businesses. You have Airbnb using it to automate text messaging. Oh yeah, you just booked this room. Bing. Or Glassdoor saying, hey, you want some, you were interested in looking for a job? You can get this email posting on a regular basis. Twilio SendGrid, they acquired SendGrid. So you can get this bings. Oh, this potential job opening might fit what you're looking for. They also have Twilio Flex, which has to do with a customer call center business model that effectively, if you have drivers for Lyft saying, hey, I'm having a problem, they need to call Lyft, now it's easily sort of operated through the Twilio Flex customized call center software that helps out Lyft. You just see so many different types of solutions that Twilio is providing, whether or not it's call center, to things like Wise. Wise is a payments transfer business where they have two-factor authentication provided by Twilio. So effectively, customers can access their funds more safely because of the software that Twilio provides. So you can see these are some very large world-beating companies. Some are critical companies, American Red Cross, so mobilizing Red Cross staff faster through text messaging. So you can think this is the infrastructure being powered by Twilio. So it's not surprising to see strong dollar-based net expansion because they have a usage-based business model. So as their end customers send out more texts, send out more emails, that means, because it's a usage-based revenue model, that Twilio's business will grow as well. And so you can see here, looking at the second quarter of 2022, they had 123% dollar-based net expansion, which means generally, if you didn't have any new customers, your existing cohort would have grown by 23%. So you still would have had, around 23% growth. So this is very attractive, and it means their end customers ultimately rely on it. And you think about, these solutions are deeply ingrained with many of their customers. And not only are they providing the infrastructure, but they're looking to move up the stack, increasingly add value to customers. They acquired this business called Segment to help them provide more personalized campaigns on every channel, to analyze the data that they're coming across. The way to think about this is a way of treating customers with like a VIP treatment. That's the way they describe it, where, hey, what if you could have more precise data based on the customer that's calling you up or based on the customer that's texting you? What's the probability that this is a more valuable customer? What's the probability that this customer is going to walk away? And so when you're able to change your language, change your messaging based on all these different data points, like, oh, we have the analytics to say this is the message we should send to this customer because they're more likely to sign up, or this is a customer that we're about to lose. This could have actually a pivotal aspect to a business model. This is actually really important to think about, because a lot of businesses look at customer support as a cost. But I think the best leaders with customer support think about it as a revenue generator, where they think, hey, how can we turn this business, which is typically a cost center, into a revenue generator, saying, hey, how do we improve sort of either customer retention or more easily onboarding a customer? Thinking about these aspects. And when you start factoring this in, this potentially leads to lower cost of acquiring a customer and potentially a greater lifetime value of a customer if you have a better sort of interface with communicating with your end customers. So all these businesses that use Twilio can now sort of create, effectively different channels saying, oh, okay, well, this is the email that we're going to send using this. If we see a customer responding this way, this is the text message that we're going to send if we see this. And that type of policies can lead to much better outcomes and better unit economics for Twilio's end customers. So the question is, where does Twilio stock, TWLO, go from here? If you're looking for compelling investment ideas or want to take charge of your investment journey, consider unrivaledinvesting.com. In full disclosure, this is not financial advice. So looking at Twilio, first, one should understand, they are targeting this quote unquote communications platform as a service market. Is it unrivaled? No. They do have lots and lots of different competitors. Some are targeting very specific, products, saying, hey, we want to target effectively like the SendGrid market, saying we're going to target emails, or some are saying, hey, we're going to target, text messaging. So there are these competitors that target specific solutions. There are also targets that are trying to offer the broad suite, like what they're doing, like what Twilio is doing. The question is, okay, so it's not unrivaled, but could they still win long-term by having a full suite of solutions, plus this sort of angle of having analytics, creating value, saying, hey, we're going to analyze the data, resulting in more effective communications for your customers. Looking at one such competitor, Vonage, they talk about how they have an API business. Vonage has a lot of different pieces, but they do break out their API business, which is a lot smaller and growing at a slower pace. So that is a data point I like to see, suggesting, okay, Twilio does have a strong value proposition, but that's clearly known just based on looking at their customers. It is tough to size up if Twilio's private competitors are taking share because they're private. A lot of them are a lot smaller. So it's tough to size up, okay, how fast are these businesses growing? But outside of pricing, why would Twilio's customers, think of an Airbnb, think of a Lyft, think of a Red Cross, why would these customers switch vendors, leave Twilio, when arguably Twilio provides such a critical interface with customers? So it really does make me sort of ask, okay, so a lot of these customers, I don't necessarily know if it's providing a full suite of solutions, if that's really a competitive advantage, but I think about how critical, Airbnb doesn't want to screw up the text messaging that it sends to the customers. Now, it might turn into a pricing game where they sort of shop it around, and that is sort of a concern. So you do want to track their gross margins over time and see that, hey, is this continuing to improve over time, like management is talking about and guiding to? So that is something you want to follow. But, looking at this, I would think Airbnb wants to focus on improving the experience for hosts and guests. That texting isn't necessarily like that game changer. They should focus their, R&D costs on other aspects of the stay, maybe, less fees tied to, the cleaning fees or things like that. Interestingly, thinking about Twilio, I just wonder if it could be an acquisition target from either a customer support related business like a Zendesk or a company like Shopify that's all about enabling merchants with various different solutions. I wonder if you could have like a Shopify, premium solution that includes all of, what you get with Twilio. And I just wonder if it could be a good fit, if they'd be an acquisition target. It's unlikely just given, how the shares are structured. You do have Jeff Lawson, co-founder and still CEO. He's targeting, he thinks the annual organic growth will remain at over 30% through 2024. That is exceptional growth. And targeting, saying, hey, we think by beginning with full year 2023 results, our goal is to deliver annual non-GAAP operating profitability. So that means non-GAAP operating profitability greater than zero. I personally don't put a lot of weight on that because, whenever you're talking about these non-GAAP figures, it oftentimes includes ridiculous amounts of stock-based compensation. In this case, you're talking about a company with nearly $1 billion in stock-based compensation in the first half of 2022, $400 million in stock-based compensation. That's a heck of a lot. Thinking about the valuation, this company is still hugely negative in terms of actual GAAP earnings. And in my opinion, that is what matters. You can strip out maybe deal amortization. Stock-based compensation is a very real expense. I wish more management would treat it seriously. I think some of the best investors, some of the best allocators, some of the best management are the ones that say, yeah, stock-based compensation is a very real expense, folk. And so I would like to see that happen here, especially when it's like, oh yeah, we're profitable, but by the way, we gave away $1 billion worth of our stock to employees, but that's not an expense. Like it's just ridiculous. So here it is. This is a company that's still unprofitable and still cash burn. So it is important to factor that in when you think about this business. So here's a hypothetical valuation framework. Once again, stock price can go way higher, way lower. This is sort of thinking about what could the stock do if management executes. If management doesn't execute, expect way lower results. So this is sort of a framework for what are investors potentially playing for from here. So assuming around, mid 30% growth this year, around 35% plus or minus, the question is, what's their profit margins look like 5 years out? They're nowhere near this now. I was just showing how they're hugely unprofitable. They're still cash burning now. But, this is a business with 50% gross margins. Maybe it gets to over 60% over time. I'm penciling out 15 to 20% operating profit margins long term. Let's see what they can do. And I think it's important to have a range, to try to be conservative about what do you think they can do. Because if you're just going to assume 30%, that could have a huge, impact on what your returns are. So I personally, whenever I'm looking at a company, I try to have a reasonable range of thinking about, okay, well, what are investors playing for here? With around 50% gross margins, keep in mind, 50% gross margins are way lower than most traditional software businesses. So it is important to adjust what you think the end margins can look like. That does impact what the appropriate multiple is. So looking at this, 15 to 20%, that's going to require a heck of a lot of execution and operational leverage in the coming years. Assuming 20 to 25% annualized growth in the years ahead, that is effectively assuming on a per share basis. And I'm using a 200 million share count figure, which includes adjusted diluted shares. So a lot of folks are going to look at a 183 million shares outstanding. The reality is you've got to factor in additional dilution. Look up anti-dilutive in the latest 10Q, and you'll see this is around a $15 billion company trading under 4 times sales. Think about 20 to 25% annualized growth per share in the years ahead. That's what I'm penciling out. That's going to require a heck of a lot of execution, assuming an end multiple of around 15 to 25 times. And this is largely assuming, a slight contraction in continued valuation or effectively stays the same in the high case, in which case, if you effectively have valuations stay the same, but they prove out their profitability and they're able to get to 20% operating profit, and they're able to grow at 25% per share, revenue per share, over the next few years, then you could have a situation where the stock is up 200% over the next 5 years. And that could be quite compelling. So I look at Twilio and I'm thinking to myself, this stock, for folks that are willing to sort of take the leap, make the leap and say, hey, I think management is going to get to 20% margins. I think management is going to continue delivering mid 20% growth on a per share basis over the next 5 years. I think in that scenario, you can pencil out in sort of a high scenario that you're looking at around 200% upside over the next 5 years. And that is quite reasonable, I would say. It's not really crazy compelling to me personally, because I would rather look for sort of like Warren Buffett talks about, like, he looks for the 1 foot hurdles. And I look at Twilio and like what you're looking at here, and I sort of think of this as like a 3.5, 4 foot hurdle. Like, they're clearly delivering. They're clearly one of the best players in the space, but there's a lot of execution. There's going to be a lot of hurdles that they're going to have to jump from here in order to get you to that attractive return of 200% upside. Now, of course, investors could assume, oh, okay, you're going to deliver it, and then you just get full credit. I personally think we're now in an environment where investors are no longer saying, oh, I believe you. Now investors, especially with Fed tightening, are going to want to say, hey, this is a show me type of environment. Show me the money. Show me your profitability. Show me your margins. I don't think Twilio is there quite yet. So that's part of the reason why I'm not pulling the trigger. Once they cross that threshold, and it's becoming clear that it's a much more sustainable business where I don't have to worry about $1 billion in stock-based dilution every year that's sort of holding back my returns. And I could look at this and say, hey, they've got the free cash flow to sort of self-fund this business, do additional acquisitions if they want to, and grow at 15, 20%, maybe more a year. And I'm not worried about crazy amounts of dilution in that scenario, I think I would be more inclined to buy, and I'd be willing even to pay up for it because I'm not having to sort of cross some of these hurdles where I'm sort of saying, hey, will you even get to 20% margins? If they were at, 5% margins, I'd say, okay, well, you're slowly getting there. So I call out companies to Unrivaled Investing subscribers where it's like, hey, this company's already proven that it can grow, that it has 20% profitability. They did that, last year, but they're making an investment this year, and you could see a business that trades at, multiple lower than Twilio, and they have a recurring business that's growing, at a comparable speed, mid 30%. So that's the type of setup where it's sort of the 1 foot hurdles versus the 4 foot hurdles that I'm personally looking for. If you have a different view on Twilio, if you think I either overlooked an aspect of their value proposition, if you think they are either stronger or weaker than the way I sort of framed it, or you think the value proposition or the stock price, there's an aspect to their growth potential that I'm missing, I'd absolutely love to hear it in the comments below. Thanks so much for watching. If you enjoyed this video, please make a point of hitting that thumbs up, hit that like button. Thanks for watching Unrivaled Investing.